As we focus on the future of finance in the wake of the Lehman collapse, our next guest joins us to discuss the Korean market. Joining us now with more is Charles Kim, Director of Korean Equity Sales at Mirae Asset Securities in Seoul. Charles, a special focus on life after Lehman a year on. How's it looking for the Korean market?
Hi, good morning. Well, I strongly believe that the market is going to trend upward mid to long term, despite a possibility of occasional mild correction. Yesterday, the Kospi hit a 14-month high, closed at 1644, again, driven by lots of foreign money coming into the Korean market.
Is confidence really on solid ground, given that many investors were underweight Korea not too long ago?
Yes, I believe the confidence is gaining and the momentum is gaining. If you look at the foreign ownership of the Korean market, the peak was 44% in second half of 2005, and we reached a low of 27% back in March of this year. Now the foreign ownership has recovered to about 32% level. Foreigners have net bought Korea to the tune of 22 trillion won year to date. They're still underweight in a historical basis, and we continue to believe that the foreigners will look at Korea and maybe take some money off the table from India and China and potentially move some money back into Korea.
Okay, that's foreign investors. How about domestic investors? They sold off as well, mainly because of the underperformance in mutual funds when we saw that happening in 2004, 2005. How much has that changed domestically?
Well, we've seen the reverse from the domestic investors from both the retail and domestic institutions. Year to date, domestic institutions net sold approximately about 21 trillion won. Last 2 years, there were net buyers of over 30 trillion won. So I think that has to do with one bit of redemption pressure coming in from the retail side. A lot of the retail investors started taking money off the table in terms of the fund investment and investing directly into the market. And also, we've seen some government national pension fund taking some money off the table and profit taking some of their investment where they invested very early last year.
Okay, so good news, euphoria is back in the market, but euphoria itself can't be a good sign. There's risk right there, don't you think? I mean, pension funds, if you take a look at pension funds, are they in speculative trades at the moment?
No, I think pension funds overall are very cautious. I think they try to support the market when there's a lot of volatility in Korea. But actually, they've made a wise investment by investing so early into the crisis back in November. And if you look at Korea really, the Kospi market really recovered, started in November. That was the trough. Really recovers, accelerated probably around March when a lot of the foreign money coming in. So when the foreign money started to come in, that's when the national pension funds started to take some profit. So I thought, from my view, they were making a smart decision.
What do you do with the money in Korea now if you want to play the Korean market?
I would continue to incrementally invest in the Korean market. The Korean market is relatively undervalued relative to the rest of Asia. We're looking at a very, very strong EPS earnings growth of about 48% this year, potentially over 45% next year. So if you look around the region, especially China, India, you're looking at a double-digit EPS growth versus China and India. Also, valuation is very undemanding. Current PE for Kospi is 13.5 times, 09 around less than 10 times 2010. So it is relatively cheap. Latest government figure I've seen regarding GDP number was that we're looking at minus 1.2% this year and potentially positive 2.2% next year. So I think from a valuation standpoint, Korea is still a very attractive market. From a growth perspective, Korea is still attractive. I think there will be continued foreign money coming into the market. And in just looking at the overall individual stocks, the exporters, especially companies like Samsung Electronics, Hyundai Motors, they're gaining market share in the U.S. and China, and I think that market share gain is here to stay.
1 year after Lehman, let's pick up a discussion with Charles Kim, Director of Korean Equity Sales at Mirae Asset Securities in Seoul. You're very upbeat on the Korean market, Charles. I mean, Credit Suisse earlier raised Korea to its most overweight stock in Asia, forecasting Kospi to hit 1,800 in 6 months. You have a similar target. I mean, what kind of catalyst are you looking at?
I think there are three key catalysts for the Korean market. Obviously, the main catalyst will be a quick recovery for both China and the U.S. Beginning of the year, a lot of people were expecting a potential double dip in Korea. I think now most of the economists and analysts are staying away from that theory. Secondly, is the continuous fiscal spending by the government providing liquidity into the economy. The first half of the year, the Korean government spent about 170 trillion won directly trying to help the small businesses as well as the construction companies in Korea. And third is continued earnings growth for the Korean companies. The good news is that the leading exporters in Korea are doing exceptionally well. Going into second and third quarter and potentially fourth quarter of this year, they've gained market share globally. Their products are well received, and if this continues, this bodes well for the Kospi and the Korean market.
The FTSE upgraded the Korean market to developed. What impact will that have?
Well, according to some government figures, the FTSE inclusion will begin September 21st, so about a week and a half away. And potential money, positive money flowing into the market is estimated at about 26 trillion won. Now, I think the bigger impact will be MSCI developed market status for Korea. Right now, Korea is the third largest emerging market in MSCI Emerging Market Index, representing about 13% of the index. Now, if MSCI includes Korea into the developed market status, I think that will have a bigger impact into the Korean market. But definitely the FTSE inclusion is a very, very positive for the Kospi.
What's your take on the risk in investing in Korea, like other emerging markets, Charles? I mean, people are quick to flee the moment there is any potential threat.
That's correct. I think that there's a couple of risks for the Korean market. I think there's a lot of concern and skepticism regarding the market overheating and potentially the hot money or the money that's come in currently may leave very quickly if things deteriorate. Our view is that the money that's have come in beginning of the year are more of long-term money, so we don't think that will happen. Secondly, there's some concern regarding the real estate market in Korea overheating, and there's some measures that the government took to cool the real estate market, and potentially earlier than expected interest rate hike. Potentially thinking that they may raise rates.
All right.